Placing all your money into a single hyped tech stock like Nvidia is not investing. It is playing Russian roulette with a 66% drawdown loaded right into that chamber. Right now, millions of retail investors are dumping their hard-earned cash into individual AI stocks, praying for a 5x return. But hey, they are ignoring the historical landmines. Today, my friend, we break down why chasing a single stock home run destroys your wealth, and how 6.7% index weighting gives you all the AI gains you will ever need, and why owning the racetrack will always be better than betting on a single racehorse.
Listen to me very closely.
I am losing everything. Keep it simple and automate.
Let me introduce you to Tyler and Ethan. Both are 32 years old, making a solid $110,000 a year. Both of them want the exact same thing. They want to retire with millions in liquid capital. But their mindsets could not be more different. First, I want to talk about Tyler. Tyler works in tech sales. He's hyper-connected, checks financial news apps 20 times a day, and suffers from entire financial fear of missing out. Tyler is terrified of falling behind. He doesn't want to slow, steady 10% annual returns. He wants a home run. On the other hand, let's meet Ethan. Ethan works as a systems analysis. He saw his parents lose half their retirement income in 2008 just because they held company stock instead of a diversified portfolio. Ethan values peace of mind, automated systems, and risk management. He doesn't need to brag over dinner parties about investing into the hot new stock. In late 2021, the AI wave started. They're making headlines, and their paths diverged. Tyler, he decided to go all in. He took $1,000 a month and dumped 100% of it directly into shares of Nvidia. It was at its historic peak. He felt like a genius watching tech headlines blow up all over the internet. Ethan, he understood the market structure. He took his $1,000 a month and set up an automated transfer straight into a low-cost S&P 500 index fund. Here is what Tyler didn't understand about market mechanics. Currently, Nvidia accounts for approximately 6.7% of the entire S&P 500 index. Huge, my friend. And that means for every $1,000 Ethan puts into an S&P 500 index fund like VOO or SPY, SPY, $67 goes straight into Nvidia automatically. Another 65 goes to Microsoft, 62 into Apple, 38 Amazon, 32 Alphabet. Who doesn't love Google? Ethan was capturing massive AI upside, but he was spreading his remaining risk across 495 other world-class companies. Then came 2022. Do you guys remember that? The Federal Reserve aggressively raised interest rates, tech stocks collapsed. Nvidia, it didn't just slip, it didn't dip. It suffered a staggering 66% drawdown, plummeting from its peak down to its October 2022 lows. Tyler, he panicked. watching 66% of his life savings vanish in less than a year, it broke him mentally. He couldn't sleep. He fought with his wife. And at the absolute bottom in 2022, Tyler sold his entire Nvidia position at a massive loss, swearing, he just swore off the stock market forever. This was not a fluke. In 2018, Nvidia dropped 56% during the crypto slowdown. In the single 6-hour trading sessions, Nvidia has experienced single-day market cap wipes of over $200 billion, erasing the entire net worth of Walt Disney or AMD in an afternoon, my friend. So what did Ethan do during the 2022 crash? Nothing. His automated $1,000 monthly index purchases kept firing like clockwork. Tyler, he was panicking. Ethan's index fund was automatically buying Nvidia shares at a 66% discount, right alongside bargain prices of Apple, Microsoft, Amazon. And when the massive AI bull run exploded, Ethan didn't have to guess the top or the bottom. I want to fast forward to today. Tyler, he sits on the sidelines with locked-in capital losses, bitter at the system, terrified to invest, and stuck working until age 67, maybe later. Ethan's portfolio is compounding toward multi-million-dollar freedom. He captured the explosive growth of Nvidia without ever exposing himself to a single company destruction. Think of it like a racehorse. Tyler bet his entire life savings on horse number 4. Tyler went broke. Ethan bought a share of the entire racetrack because horse number 4 was the fastest horse. Ethan got a cut of every win. But when horse number 4 tripped, 499 other horses kept Ethan's wealth growing. Stop gambling on single horses. Own the racetrack, my friend. And welcome to the Turbo Investor. Subscribe. Now get to work.